Hello everyone and welcome to our regular streaming session. I'm Stan and I will be your host today. So yeah, I think that let me double check if everything works correctly. Well, I think it is. Hello everyone and welcome to our regular streaming session. I'm Stan. All right. Let's get started. So I'm Stan, Senior Trading Specialist at Exness. So I will be your host today during this session. We will go through the markets. We will see what's visible right now from the top-down analytical perspective. We will try to see whether we have any opportunities for this week. What are current trends, current narratives? And so I will also watch the chart here on YouTube, so sorry about other platforms on Twitch or Facebook, so I'm not currently viewing what's going on there. But if you want to participate in the chat discussion, so you can join our YouTube streaming session. So just go to YouTube, put Exness there, subscribe, and you will get to the broadcast into the streaming event, and you can absolutely join the discussion on YouTube. All right, so guys, we'll today go through the markets, and before we dive into that, let me quickly elaborate on the topic: what makes a good trader? What makes a good trader? It's not just ability to read charts, because you can find a lot of people on the internet and the social media that's just displaying some charts. Okay, here is a supply and demand zone, here is chart pattern, whatever it is, a trend. Well, while it's very important, knowing technical analysis is very important, but you need to being able to filter that with some kind of fundamental understanding, or going into the microstructure, anything else, understanding narratives, something like that, because otherwise you might be very easily caught into the price action, because price action might be choppy a lot of times, might be misleading a lot of times. And markets too often, or the price is just the advertising mechanism. It's often misleading. It's moving up or down, so you just starting to overthink the process. You get into the trade, you get stopped again, and finally that leads to the big frustration. So before you ever get into the trade, you need to be prepared. You need to know what's driving the market today. You need to build the anchor idea. I called it an anchor idea. So you need to make your homework. That's absolutely essential. Well, that's a top-down process. Well, also there is a bottom-up process when you don't do any homework. You just sit in front of the screen and you start just recognizing patterns or recognizing price action. Sometimes that works when the market is strong, when the market is trending. Sometimes that might make sense, but not all the time. So I am a big believer of combining fundamental and technical analysis together into a holistic decision-making framework. So if you learn to do that, so your results will be far ahead of your competitors, of fellow traders who just read charts. And that's the number one thing. Number two thing, forecasting is not enough, or it's so important. So people are so much consumed by forecasting. So they want to forecast the markets, where the price is going to go up or down. Well, guys, it's extremely difficult to predict the price. So predictions are extremely difficult. So what we can rely on, what we can get the best of is, assessing the probabilities. For example, probability of the upside move, probability of the downside move, probability of a choppy action, and so on and so forth. But most of the time your predictions, your projections will not work, and that's absolutely normal. So trading is not about predictions. It's not about predicting where the market will go. It's about benefiting from the market move. So you might be wrong for 60% of your time, 70% of your time, 30% of your activity might be profitable, even less. You can capture big trends. Just wait a minute, one sec. And that means that best traders might be okay with even having a lot of stop losses, but they could cover that with one big move. So that depends on your strategy. predicting might not be that important, but if you are keen on predictions, if you are keen on understanding the market, so you might minimize your drawdowns, which is also good. For example, if you achieve 50% of profitability, if your win rate might be at least 50%, that's already a pretty good result. But if you achieve 70%, well, that's very cool. But making money, so that's not just when you enter the position and being right, so that means also exiting from the position, or in other words, capturing trends and capturing volatility. So basically there are two evergreen, I would say, evergreen alphas, or two evergreen inefficiencies which you can work with: trends and volatility. They will not go anywhere. Otherwise, scalping price action that might vary. So things that work today that might not work tomorrow, so you need to adapt. That's absolutely fine, but trends will be there and volatility will be there. With that perspective, we will go through charts and try to understand what's going on in the markets today. All right, and now from time to time I will read our chart. So don't hesitate to write anything here if you feel that you have any question. All right, so we are inside of Exness platform. One second, guys. One second. All right, so yeah, so we're inside of Exness platform, meaning that you see here several interesting tools which we have. You can absolutely use them. The first is economic calendar. I would not say that it's just interesting, but it's essential. Tracking major global events, and volatility is dependent on events which are going to be published. So economic events, most of them are put in the calendar, so you can schedule them. Actually, they are scheduled, unlike political events, for example, when President Donald Trump can claim something and the markets can quickly move. So that means that economic events are actually scheduled. They're published with a schedule, so you can absolutely plan your trading according to that. So volatility pops up when events are actually published. So this is economic calendar, so let's take a quick look on that. And what is here basically? So there are a bunch of currency pairs or currencies which we can filter out to see what's gonna be published this week. So I usually start with USD, with American dollar, because most of pairs and most of instruments which we are trading, they're quoted against the US dollar. Let's give it a go. So today is March 25th, Tuesday. What will happen today? So we have consumer confidence for the United States in 2 hours. Basically, not a very important indicator, but that's supplementary indicator, and that is why I'm saying that it's not very important, because that's a sentiment indicator. Consumer confidence, Michigan Consumer Sentiment Index, or similar indicators. These are basically polls when some agency asks people or asks businesses, how do you feel? Do you feel confident about the business? Do you feel confident about tomorrow? Something like that. So basically that is important, but that's not official statistics, which, for example, the Federal Reserve relies to. All right, why we are actually watching these guys? Because we want to know what's gonna pop up this week. Scrolling it down, March 26th, it's Wednesday. Durable goods orders, pretty important indicator, not very important, but what is really important is March 27th, publication of US core PCE price index, personal consumption expenditure. This is an inflation indicator known also as the Fed's inflation. And that's important because currently market is kind of in some equilibrium. It's waiting for the more information to finally assess the scenario for probability of an interest rate. Interest rate defines, or expectations about the interest rate define yields of bond market and interbank swap rates, and thus it might influence currency rates in the first place. So for example, if we go to FedWatch tool, the CME Group FedWatch tool, so where it is, okay, here it is here. We go into cmegroup.com/market/interest rate/CME FedWatch tool, so you can Google that easily. And let's see what probabilities do we have for the upcoming meetings for the Fed. So May, for example, 89% of traders are convinced that interest rate won't go down. In July, already 56% of traders are thinking that we'll have quarter point decline. That's fine. So what else do we have? July, it's kind of equilibrium, but also quarter point decline is 48%. But for September, it's equilibrium. 38% versus 34%, so meaning that there is 50-50. So let's go to September and see whether we have any changes here. So for the last week, we had probabilities going up slightly. For example, dovish scenario for 425, it's going up slightly from 23 to 32%. And previously 375, 4% was discounted for 43%. So market is kind of trying to get more hawkish, slightly hawkish, a little bit, getting back to the equilibrium. So basically there is no intrigue for September. So if you want to guys really understand what will happen with the direction of the American dollar, you gotta watch the September's meeting, the probabilities of September's meeting for the Fed, for the interest rate decision. So, and to figure out where those lines will be directed. So if you see, for example, the blue line, which stands for 425, that's the one quarter point decline. If it will go up, for example, that means hawkish scenario for the US dollar, and that means usually the support of the US dollar. So if it will go higher, for example, higher than 40% and 50%, 60%, and that's so on and so forth, usually American dollar is gonna get in play. But currently that's equilibrium, and market pretty much stacking the odds for one quarter point decline for May. For June, the same situation, so 58% are convinced about that. July, also 48% of traders are convinced about the one-step decline, so probably we're already there. All right, so that's interesting because currently there is no intrigue here, so probably interest rate will go down in July or June. So the question is only when exactly. And currently the intrigue is probably May. Probably May is the intrigue because 11% of traders are convinced that the interest rate will go down in May. I don't think anything will change here, but if you see probabilities for May changing, all of a sudden, for example, now it's 10%. If you see it changing, for example, rising to 30%, 40%, that might be the substantial pressure for American dollar. So if anything changes here, so the result might be pretty strong for the short dollar. Currently, we are not there yet, so let's see PCE publication this week. Also next week we'll have we will have again publication probably of non-farm payrolls next week. So for March, yeah, it will be the beginning of April. So for March we will see the publication of non-farm payrolls. All right, so currently American dollar doesn't have any support nor any resistance substantial. And that's why we're going to Google and let's check the yields of 30-year treasury bonds. And here it is, cnbc.com website. So 4.69, so it's rising a little bit. All right, so as probabilities on the FedWatch tool are not changing, so we want to check the yields of government bonds for the United States. They're going up a little bit. So that means that American dollar this week has a little bit of a support. Why is that? Because when the bond market is falling, yields of 30-year treasury bonds are growing and the more capital flows into the US dollar. That's how it works. The same situation might be visible for Japanese yen, for example, for other currencies, but currently what is most notable here is the behavior of yields of government bonds of the United States. So American dollar is slightly supported here. All right, now let's go to charts. Let's go to Exness platform and index. And what do we want to see here? So let's first off switch to the daily chart. And the last 2 weeks, the market was positioning in the range-bound action without no developments. It was just standing near 0.4, displaying the lack of directional bias for the American dollar. So that's how it works basically. You see that this zone of 104.08 is the indication that no directional bias is being made on the American dollar. Okay, so I will read some messages in chat. Good afternoon, Stanislav. Yeah, good afternoon. Nice to hear you. All right. Where are you guys from? So put us down something in comments. Which city are you watching us from? What's on your watch list today? So what you're trading exactly? All right, we will be more happy to go through instruments that you are also watching to try to analyze them. All right, so guys, so we see here no conviction here, no action on the US dollar index. All right, maybe we will see on any other assets, but on the US dollar index we have no action. Surprisingly, so what else do we have? All right, as the American dollar is slightly supported here, yields are going up. You see that it was supported slightly, maybe not today. Today is it's getting into correction a little bit, but for the last week it was supported. So I would say that probably we have some slight support, some minor support for the US dollar, but not that big. All right, let's watch the market structure a little bit. Put in here dynamic support resistance areas. Moving average with parameter of 20. Parameter of 50, so that we get the idea of where the market is. It's located on the dynamic resistance area, and usually if there is a downtrend, so usually market gets some resistance in this area, so that might be some action to the downside, or it might continue going up a little bit, then it might be action to the downside. So that would be absolutely logical given that we have the dovish scenario for interest rates. All right, so let's just record that it stands in the resistance zone. That's pretty important. And let's switch to gold right away. So I know, guys, you trade gold. All of you are trading gold, and me included. So we are all trading gold. We are big fans of the gold, like everyone else in Exness. All right. Daily chart. So let's start with daily chart, guys. And market structure clearly points to the uptrend, which is still viable right now. Let me show you what I mean exactly. Why am I viewing the uptrend here? Well, first of all, if you take the market structure, the combination of 20 and 50-day moving averages, what do we see here? Gold has come here in the form of an upswing, so that's an upswing basically, which we're located into, reaching $3,050-ish. So that's a new historical peak. Let's just record it here. That's a new historical peak. Now it's still moving inside of this trend, slightly above the dynamic support, but let's try to figure out what was the distance between the support and the peak, and the historical peak. Basically that was 4% of growth, $118 in terms of asset price. Let's put here average to range indicator. Average volatility is $32, meaning that the growth above the support was more than 3 daily volatilities. More than 3 daily volatilities, more than 90, so that's 118. So basically that means that market is in the bullish trend right now. in the bullish trend, and currently today might be the pivot moment. We've been pointing out that, by the way, guys, on the previous streaming session, 1, 2, 3, 4th day. So today is probably the bullish day for gold. It might be potentially the problematic point. So the structure either breaks or either continues in order to test the previous high. So I would advocate for continuation of a trend for gold. And let me also watch the commitment of traders perspective. So that's what it is. So that's basically the indication of an open interest for the futures market on the commitment of traders chart. What it is, so basically these two lines, we have two lines here, the red and the green. The green is a net position of big speculators. So these guys don't make a delivery. They don't care about the gold bars. But the red one is commercial traders, producers, merchants. They are aiming for delivery, so they're not just speculating. Even if they're holding positions, usually they transition to delivery. They had a new pick not so long ago. Well, not a new pick, but another pick. March 17th. March 17th, that's a new pick. So basically that's an accumulation pattern of gold. That's a very unusual pattern, guys, because whenever the price goes up, usually the green line speculators are also going up. Currently, we observe the different situations. So the price was going up and the position of commercial traders was making an accumulation. They very rarely do so. Usually they accumulate the position on the pullbacks, on the drawdowns at a lower price, but now they accumulate at a higher price, displaying the increased interest to this asset. With that, I would probably be bullish on gold if I see the situation. Probably the market has very strong directional bias for the long, very strong, okay? What can we see here? So usually when you see the 4th day of, when you have the market structure breaking again to the upside, something like that, the main question is whether you can jump into this position or not, and how exactly you can jump. You need to have patience here, guys, because if you jump in at the high, you may end up getting stopped out, getting whipsawed. Short stop losses, small stop losses are usually getting whipsawed. So that's the nature of the market. Market usually makes the mean reversion activity or dominates with mean reversion activity. Just take a look at any direction. So it reaches the peak, it pushes down, reaches the peak, it pushes down. Depends on your stop loss, of course, and depends on where your stop loss is located. But if you want to get really into the winning trade with short stop loss, you need to find the exact entry point. So with that, currently, so first of all, we are referring to the zone. Where are we located? We are located at the peak of the Bollinger, which is not very good point. So at least we should maybe stick to the average, to the middle, to the midpoint of the Bollinger, maybe somewhere here, or if it pulls back, if the Bollinger, for example, gets narrow, so we can get it here from the bottom. So the idea, guys, is to capture it at the bottom of the range. So if you build a distribution, for example, which might look like that. So if you've seen market profile, you know what I'm talking about. So usually if we organize the data in the form of the horizontal distribution, something like that, the best course of action for us would be to try to buy at the bottom of this range, somewhere here, not here. And that's why we need to wait the price to establish the pullback. Sometimes pullbacks are not happening when we are inside of the trending days, right? It just goes up and up and up and up and never pulls back. That is also a possibility. For that purpose, we are switching to the lower time frame, and we might want to get into the position. Of course, with the remark that lower time frame means more potential noise. So that might be the noisy action. What is a noise? Noise basically is a misleading price action. When you get into the position, you might be wiped out quickly, but that might be the noise. Okay, so what's here? What might be here? So that's the same situation. You wait until some trading range establishes on the way of a trend, maybe when the price captures the bottom of the trading range. We speak about every time on every stream, but that's basically the best setup for the intraday traders, whether you're a scalper or a position intraday trader, something like that. So you capture the false breakout against the against the correctional move. So if you want to get into the trend, be patient, don't just jump in, wait for the correctional move. Well, you are free to do everything you want, right? So that's not a recommendation, not a trading advice. I'm not an advisor here, so that's just an educational webinar or streaming session. So, but I'm telling you what I do. So I wanna capture the pivot point within a day in order to have the point of no return. I call it the point of no return. So if I'm in the point of no return, so I don't care about the price action anymore. So it can be as choppy as it wants, but I will be in the good position for establishing it from the potential bottom of the day. Who cares if the market will pull back, if it will go higher, lower? I don't care anymore. So I'm in a good position, so I can take some of this position from the table and play with the Exness money, let's say, and hold my position higher. So that's what I would do in this situation if I would be trading this situation until it reaches the peak. So peak is also another problematic point, the new historical peak, where the market can actually touch this level, then rotate back again. So that might be the problematic point. I'm not sure that now is the good point. So now, as the price is just leaning to the upper bands on the Bollinger on the 5-minute chart as well as 30-minute chart, that might not be the best action, but still I think that, speaking of the market structure, that might be potentially long situation, the long position. Okay, speaking of the daily chart, it's potentially a long position, I think. You can even build the zigzag indicator here if you want. So that's another way to build a market structure. And the zigzag indicator will also, oh well, that's a pretty big one. Let's try to scale it a little bit. The deviation is 5, so that's a lot. Let's put 1.5, for example. Let's put 1 here. Okay, that's too, I think that's too much. According to zigzag, we're even in this, we are not in the uptrend anymore, but already whatever. Let's remove zigzag. All right, so market structure points that we might be in an uptrend. So my course of action, my anchor idea for today might look like that, something like that, okay? Might look like that. And I would try to participate in the action here, maybe distribute this position at another pick, something like that. So the foundation for this idea is that gold is driven by, so first of all, it's technical, it's in the trend. Trend is your friend. That's very simple, don't overcomplicate it, guys. Trend is really your friend. If you choose to stick to the trend, 7 times out of 10 you will be right. Another one, I see the strong pattern of accumulation here on the commitment of traders reports. March 17th, a week ago, there was a strong accumulation. So big commercial traders have been accumulating gold with increased pace. They decreased their short position towards 261,000 contracts, which is basically the previous peak. And yeah, speaking of that, also we have the bunch of political instability, geopolitics and everything that drives gold higher. And even though the American dollar is fluctuating, so American dollar doesn't have any clear direction just yet. Yields of government bonds are going in sideways mode. They're not changing very much. They're going up with a slight increase. But currently, gold does not have any correlation with the US dollar whatsoever. It remains to stay the only instrument in the first quarter which was actually growing, other than probably Chinese stocks. Maybe Alibaba was going up. What else? DAX was going up. But DAX is no longer going up. I mean, the German index, so it's correcting. Gold remains the only asset, so just think about that, guys. Gold remains the only asset that was actually growing in the first quarter of 2025, according to the global picture, global market perspective. Of course, there are some stocks and cryptocurrencies which might have been growing, but such a big market with a huge capitalization was just gold, nothing else, maybe silver. All right, so that's why we might refer to that. Usually the more aggressive pullback might be from the support, might happen from the support. Dynamic support is here, just right below, and if the market goes down, if it doesn't hold the action, the next possible entry might be from the support. So that's another good zone for entering the position, the dynamic support area. If it doesn't go today, so if it probably it will pull back from the support. Trend is your friend. Very simple, right? Don't overcomplicate it. Trend is your friend. We are in the trend right now. So if we're in a trend, so you can try to ride the trend. Even if you will be stopped out today, you can get into this position later. Stop loss will be covered later with the profit that you're gonna make with this trend. However, the trend is also mature, so that doesn't mean that it's moving up infinitely, sorry. And if it reaches another point of overboughtness, such as 3080, for example, on the Bollinger, something like that, for example, it reaches this level, so it might correct down. So I don't think that this trend will last forever. No, nothing like that, but at least we are now in this trend. All right, so let me read comments a little bit. So we've gone through gold. Paul is watching us from Shanghai, China. Hello, Paul. South Africa. Keobaka Metsing. I don't know if I spell your name right. Hello, South Africa. India, New Delhi. Hello, India. Aloha, sorry. Can you look into the German 30, which is DAX, right? All right, so you're very keen. So you're monitoring the growing assets. Let's go to see DAX. Yeah, that's right. DAX is consolidating. It looks pretty strong, right? In comparison to S&P 500. In comparison to S&Ps, DAX is strong, it's consolidating, it's right on the support. However, I think that the control is a little bit changed. So what do I mean by that? You see that previously we had a very strong pattern of accumulation, and we had a massive upswing, then the correction to the support, another upswing, another correction to the support, another upswing, another correction to the support. So for some time, DAX is looking into consolidation. So it establishes yet another peak here. Now it's looking into consolidation. Well, I think that still you can capture a couple of days of action here, because you have the responsive bar right from the support, from the dynamic support. That's basically okay-ish, so you can trade it. I think maybe not today specifically, but tomorrow, day after tomorrow, that's possible to see the continuation of this move. I don't think that it will necessarily translate into the larger move, because we have a little bit of change in control here as the market is turning sideways. As the market turns sideways, usually the better trade location or the better entry point would be when the price would test the static support in comparison to dynamic support. When the control changes, I usually monitor the price under static support, something like that, okay? For example, it goes higher, it fails, it continues to go higher, then it fails again below the static support. Volatility a little bit explodes or increases. Well, that would be a much more interesting type of opportunity. And for example, if it goes below the static support level, in our case it's 22,250. And if you see the responsive action right here from the static support, that means that you can capture the legit swing, legit move to the upside, something like that. I don't know, maybe it will go higher. You never know. But the aggressiveness and the sharpness of the move might be much greater from the lower level in comparison to this level. Because when the market goes higher, volatility is actually small. So it's actually small market moves with the small candlesticks, daily bars like dojis. I don't think that's a huge opportunity for the trader, because if the mature trend, the more it goes up, the more it loses volatility, it goes step by step. It's like stepping on the stairs. But when it falls down, it falls to the elevator, like an elevator. And we need to capture moments of rising volatility. So let me just provide you with example. For example, just April 2024, when the market was growing, the same situation. It was going up and up and up and up again. Then it retraced to the support, and then boom, suddenly it did what? It retraced below the static level. The static level in our case, there are several static levels, but the most prominent is the pullback, series of pullback lows here. And then it starts to do what? It starts to recover, and the recovery is pretty aggressive. The recovery is pretty aggressive. You see the pin bar from this level, and it starts going up. So after this volatility spike, so the move is pretty aggressive here. And the same probably is here, August 2024. Well, that was a big volatility spike. Maybe that's not a good example, but I want to show you guys the principle. So when you have the control changing, when the trend is not that strong anymore, when you have the mature trend in place, just focus on the static levels, on the shakeouts, on the market shaking out, increasing volatility, and after that it might start recovering nicely. Something like that. And so you need to be patient a little bit to not get involved in the action. I think today we might have, or this, not today necessarily, but these days we might have similar picture. For example, market goes higher, then it shakes out, increases volatility. Maybe it even might be lower level like that, depending on what volatility would be here. And after that, the volatility becomes so much better because the recovery is sharp, the price action is fast, the days are bigger. So as a day trader, if you want to day trade, this time you will get much greater volatility of the day. So you will earn more money. Let's put it this way. All right, so reading chart. Cameroon. Hello, Cameroon. Hello, Fidel FX. Hopefully you can look into US oil next. And US oil it is. All right. Following the suggestion from Fidel FX, we are watching crude oil. All right, so I think we are done with Germany index, right? With DAX. We're done with DAX. It was pretty strong. So keep an eye on them. Keep an eye on the action, so on the volatility. So if volatility explodes, if it grows, the opportunity might improve a little bit. Currently entering the peak. Well, it might grow actually, but I don't think its volatility is pretty. I don't think with such low volatility you will get much opportunity for trading. Crude oil, so let's watch the WTI crude oil. That's pretty interesting. It's recovering towards 70. I think 70 is a fair price for this asset. It's moving already for several days in a row, 1 to 3. That was March 20. That was March 20. So let's check it out. So how many days it's moving? So 21st was another day. So last week it was moving up. So now it continues to move up too. Recovering, I think, to 70. So 70 is pretty close to the sanction, though that would be the test. So I think it's too late already to jump in the long position, but 70 level might be the potentially interesting level for a test. Why is that? Because 70 is basically the fair price, is considered as a fair price for the market according to short-term energy outlook, STO forecast. So just quickly, let's again go to Energy Administration of the United States, and they have such tool called STO forecast, which is a short-term energy outlook. Go in it here, clicking it here, and you see that around 70, maybe slightly higher, right? You're gonna see the potential peak according to supply and demand equilibrium. Currently the price is, so the projection is still down, but we might wait for the price to reach this level. 70 also is pretty interesting level. It was the breakout from the previous formation. You see this pretty elongated formation. So then the price was breaking down with a minor retest of this level. So that's a 70. So that's, I think that's obvious that we have a level here, and the price is gonna test this level. The good question is what happens next here. So I think that we're still in a downtrend. But there's still no evidence for the market to reverse quickly. But let's watch the action at this level. Okay, let's watch the action for this level. You don't need to actually go against the trend necessarily, just you can wait for the red bar closing to the downside here. If you have a red bar closing to the downside, maybe you can later get a pullback. At the same time, so that's one of the scenarios. Another scenario, the continuation of the price, if it will or might go up or not. So let's watch the commitment of traders perspective. Let's go to crude oil here and see what's going on with the position of commercial traders. If we have any signs of accumulation, we have it basically at the beginning of March. The commercial traders, they have been accumulating the position for some time, and we had a new peak, new bottom reached for crude oil. Also, let's watch some cyclical patterns here on the daily chart. Let's watch average true range indicator, and we see that it had been positioning at the new bottom. The ATR or the volatility would position at the new bottom for some time. Usually that means the beginning of the new trend or the new swing. We are now in this trend, in the downtrend probably. We are now in this trend, so the 70 would be probably the problematic point for the price, and I would monitor for action at this level. So usually that works like that. So when it touches the fair price, according to fundamentals, it might quickly retrace back. And we know that the crude oil has very aggressive nature. So in other words, it retraces pretty massively in case of a trend. So yeah, that would be my probably course of action. I won't get into long positions because it's already, I think, too late, but I will watch the price reaching 70 level, maybe 70, 200, something like that, and I will carefully watch the price action. Maybe I will get a good entry point right away. I don't know how that would look like. For example, definitely I would put Bollinger Bands indicator here, and if, let me remove some of the stuff from the daily chart. For example, so how the entry pattern might look like. For example, price comes to this level, starts to form some formation like triangle or anything, pulls, breaks higher, fails, and goes down. So for me, the false breakout or the failure of a breakout would tell me that market is actually weak rather than strong, and I might use it for building the short position. I will be very careful though, because you never know how aggressive the breakout might be. But if it will be false beyond this level, you need to have patience for that, right? You don't need to jump in quickly. You might want to, because you see, oh, that's 70 level, so let's immediately short. Well, you can do that. Nobody can tell you not to do that. But to get a really good trade with a really low risk, you need to be a little bit patient in this case. Wait until it tests the level, goes beyond the Bollinger. So the Bollinger Bands in this case will go like that. So it will go after the price, and price will slightly go beyond the Bollinger, okay? Something like that. That might be your pattern. I don't say that your pattern will be necessarily to short immediately aggressively, no, nothing like that, but wait until this happens. I don't know why it's not placing my arrow. And your entry point specifically might be here, I think. Oh. Just like that. All right, on the next stream, guys, we will monitor the continuation. So we will see how exactly the situation played out or not. Let's make a screenshot. I will make a screenshot, guys. I think that we'll do the screenshot on every stream and see how exactly those ideas are playing out. All right. British pound versus Swiss franc and Bitcoin. Gold, yes. We've been watching gold already, so you can watch the recording of the streaming session after it ends. I think we shouldn't go once again through that, but British pound versus Swiss franc, let's do that. All right, so let's remove unnecessary news alerts. All right, so that's very choppy and range-bound market. I don't know why you paid attention in the first place for that. Choppiness is pretty extreme here, meaning that there is no trend, there is no volatility. Don't forget, we need volatility and trends for getting a good idea. If we don't have both, no volatility, no trends, so the best course of action that you can take is to monitor for the action at the bottom or top of the trading range here, something like that. Now we are just in the middle of the trading range, no trend, no volatility, balanced situation. British pound versus Swiss franc, that's a balanced situation, so I think that we put here a big question sign. What's gonna happen here? We need to wait for more information. I would say that I don't see any evidence of anything right now, maybe slightly more evidence for the bearish scenario, because the swing had started from the upside. It had several consecutive closes to the downside. 1, 2, 3, 4, 5, 6, 7 closes to the downside. Well, I would say that might be not enough for putting the decision for any action. So fundamentally, Swiss franc is a carry trade currency with a pretty low yield. So if we don't see anything on technicals, so let's go to fundamentals. So give me just 1 second. I will go to I will watch the